interesting ones. This week, this month, we've been training with the Bloomberg and also a mini conference on crypto assets as well.
रहमान से पूछना तो भूल गए कि ये
Globally, there
presentation
are
कौन manage
about
करेगा.
170,000 CFA charter holders, and CFA Society is present in more than 160 countries through its societies. Before I introduce our dear friend and guest Abdul Warraich Saab. He's a Director General Debt Office, Ministry of Finance. He's been very forthcoming, always been helpful with the society affairs, and we requested him because a lot of changes that been introduced in the auction targets and also in the floating rate PIB market. So we requested Warraich Saab to help us with this webinar and address some of the questions that market is currently having. So Warraich Saab will run a presentation talking about the outlook and the profiling of it, and then we'll take question and answers after that. Before we just hand over to Warraich Saab, just simple housekeeping rules for everyone. Just targeting for a 1 hour session, including the Q&A. All participants are requested to mute it for the session, and if they can keep their videos turned off as well. We'll take question and answer towards the end, and the chat box will be open throughout the session. So we'll be more than happy to receive your question there, so that in the meanwhile I can club the questions and across when Warraich Saab is done with his presentation. And the session will be recorded and we'll be posting it later on the website and the YouTube channel. So before further delay, I would welcome and request Abdul Warraich Saab, DG Debt, to take up the proceeding.
Thank you very much, Mr. Akbar, and thanks a lot to CFA Society for being a great partner with the Ministry of Finance and for providing the opportunity to us to communicate with the market on a regular basis. As Mr. Akbar just told you, the background of this seminar is to update you regarding our domestic borrowing strategy, particularly the strategy relating to government securities. So I will request Mr. Akbar if the presentation could be displayed on the screen. If you could go to the next, the first slide. So these are the 4 sections in this presentation. A quick discussion about the floating rate PIBs. This has been a new product which has been well received by the market, but lately the market interest has been kind of declining in this product. So a little bit of discussion regarding floating rate PIBs. And then we will update you regarding our borrowing operations during the first half of the current financial year, which ended in December. Then some data regarding the conduct of government securities auctions during the first half. As you all know, we recently introduced an auction process, and I think we did share with you some data regarding the previous financial year as to how compliant we have been with that process. So we would like to show you the figures pertaining to the first half of this financial year also. And finally, what should you expect during the second half of the current financial year, which has just begun. So let's go to the next slide. Initially, as you all know, I think back in 2018, the Ministry of Finance introduced a 10-year floating rate PIB. Um, so this product gradually was became somewhat popular, and we received good feedback from the market. And considering our desire to raise most of the domestic debt through longer tenors, we decided a few months ago to start offering more tenors of floating rate PIBs, and to also start offering floating rate PIBs that would pay quarterly coupons in addition to those which are paying semi-annual coupons. So during the first half of this financial year, you saw a lot of new floating rate PIBs coming up. Initially, we introduced the 3 and 5 year floater with semi-annual coupons. And subsequently, we introduced the 3, 5, and 10-year versions of the floating rate PIB that would pay uh, coupons on a quarterly basis. And I think about 2 or 3 months ago, there was another edition, a seventh, so to say, a floating rate PIB with a 2 year maturity and with an interest rate risk of just 14 days. So we felt that considering that the market had a high preference for floating rate instruments because it's a bank dominated market and banks typically have short term liabilities, mostly current and savings deposits. So they have a natural preference for floaters. So we wanted to incentivize the market to switch out of treasury bills, which are very short term, and into floating rate PIBs. So we felt that it would be a win-win situation for both sides. The government would be able to extend the maturities of its domestic debt, and the market will have the opportunity to earn higher yields compared to the T-bills. So while we acknowledge that market has shown a very healthy interest and participation in floating rate PIBs, yet we have been receiving feedback from various market participants that probably there are too many floating rate PIBs in the market, and at times the market gets confused, and this may also not help the strategy to have a few highly liquid issues. So, since liquidity is also an important consideration both for the government and for the market, so it might be a good idea to review the existing the different types of floaters that are being offered by the ministry, and see if some of those floaters can be discontinued so that the market has few instruments to choose from, and we can see greater participation and greater liquidity in the instruments that we choose to retain. So right now, you must have observed in the most recent auction calendar that in the quarterly paying floaters, in the floaters which pay quarterly coupons, you don't see any five or any targets for the 5 and 10 year maturities. So the proposal from our side is that we should probably discontinue these tenors. The good thing is that we have issued very little amount so far in these two tenors, so it will not hurt. So right now we are proposing to retain only two tenors in the quarterly coupon version of the floaters, which would be the 2-year floater with an interest rate risk of 14 days and a 3-year floater with an interest rate exposure of 84 days, which or 90 days, so to say, which because its yield would be linked with the 3-month T-bill. So that's the proposal from our side, and that's what the most recent auction calendar is indicating. And on the semi-annual coupon, on the side of the floaters, which pay semi-annual coupons, you must have noticed that there are no targets for the 3-year maturity. So the other proposal is that we should now issue the floaters which pay semi-annual coupons only for the 5 and 10-year tenors. There is no target for the 10-year tenor also in the current auction, but that is temporary. Since we have recently issued a significant quantity of the 10-year floater to the IPPs, so therefore we felt that it might be a good idea not to issue the 10-year floater in the primary auction markets for a while until until the quantity that we have issued to the IPPs is absorbed in the market. But I think after 1 or 2 months, you will see that the 10-year floater with semi-annual coupons will be reintroduced. So this is the proposal from our side. We intend to discontinue 3 out of the 7 floaters. A problem with the 3-year semi-annual coupon version of the floater is that the market is already heavily invested in this instrument. So the market may not like that this instrument is discontinued in future. So in order to compensate the market, we are considering granting an option to the market. Those investors who do not want to hold on to the 3-year semi-annual paying floater can switch into a similar quarterly paying floater with the same annual yield. The policy, of course, has to be approved by the minister and probably by the government if we go ahead with it. But the purpose of this seminar is to reach out to all of you and to seek your feedback. We expect that after this session, the Financial Markets Association and the CFS Society will give us their feedback within the next 2 or 3 working days as to, or maybe during the next week, as to what they think of this proposal. So if most of you agree that this is a good idea to reduce the number of instruments in the within the floating rate bonds, then we would very much like to do that. So this was the primary objective of holding this session. And I would expect some questions at the end of this session on this issue and a formal feedback from the Financial Markets Association and the CFS Society. We will send you emails requesting for a formal feedback also. Next slide, please. So this is the update regarding the borrowing operations during the first half of this financial year. We'll tell you a little bit about the overall figures and then some detail regarding the government securities, the borrowings through government securities, and then a review of how well the ministry has adhered to its auction targets during the first half. Next slide, please. So you can see that we have borrowed a total of 1.49 trillion or 1490 billion during the first half to finance the federal budget deficit. Out of this, around 450 billion has been borrowed from external sources, and the remaining 1040 billion has been borrowed from the domestic market. There is hardly any borrowing from the national savings schemes. I think most of the incremental investment in these schemes was coming from the institutional investors, which are no longer allowed to invest in these schemes. So probably that is the reason why um, we have not been able to mobilize any significant amounts through these schemes so far. Uh, and the remaining 1,043 billion has been borrowed through government securities. Next slide, please. Yeah, thank you. So this is a bifurcation of the borrowing operations through the government securities. Uh, as you can see, the gross financing through T-bills was actually less than the amount that was repaid, and there was a net retirement of around 579 billion to the market on account of T-bills. We were not able to raise a significant amount through the fixed rate PIBs, although we wanted to. I think we'll have some discussion on that during the question and answer sessions also. Um, Floating rate PIBs did very well. These were very well received by the market, at least until November or early December. Um, the market interest has to some extent declined in these instruments lately. In the last few auctions, we have received very few bids in the floaters, which of course is a matter of concern for us because we felt that this has now become the flagship borrowing instrument for the government, and it's in the market's interest also, considering the relatively higher yields that floaters offer. So it is a bit of a surprise for us that the market interest has declined somewhat in these instruments. Uh, f- no, go back, please. I think on the Sukuk side, I think this is a mistake. I think the words fixed rate Sukuk have been repeated. Actually, the second last row pertains to floating rate Sukuks. So my apologies for that. So the market response has been better in floating rate Sukuks, which was expected because the Sharia compliant funds market also seems to be dominated by the banking sector who have a natural preference for floaters. But the interest in Sukuks has generally been very healthy, and we have been able to borrow at very competitive rates. So that is very encouraging development for the government because there was very little issuance of Sukuk in recent years. And this is a very welcome change. So all in all, you can see uh, there has been a net retirement in T-bills, and more than 100% of the domestic borrowing has been made through the longer term instruments. This we feel is a major achievement on our part. And of course, it could not have happened without the market's interest and cooperation. So thank you very much for that. Next slide, please. Now, cross cross. Now, coming to our track record in terms of adherence to auction targets. If you look at T-bills, I think we did generally well. In the first quarter, we picked up, all in all, we picked up 10% more than our benchmark of 1800 billion. In the second quarter, we also picked up a bit more, but we remained within our deviation limit of 25% on a quarterly basis. And as you can see in the footnote, only in 1 out of 14 auctions we deviated from the benchmark by more than 50%. So I think the adherence to the extent of T-bills has been quite good. Next slide, please. These are floating rate PIBs. Here also, you can see in both the quarters, the overall deviation is less than 25%. So we are within our limits. And even in individual auctions, apart from 2 auctions, we remained within the limit of plus minus 50% of our benchmark. So the floating rate bond auctions have also remained in line with our targets pretty much. Next slide, please. Now, this is where I think the pattern is quite debatable. In terms of fixed rate bonds, in both the quarters, we have issued much less than the target or the bids that were received. In the second quarter, the bids were actually lower than the targets, but we issued even less. And in 5 out of 6 auctions, the deviation was more than our permissible limit. So this is something that I'm sure we will debate during the question and answer session. But my initial feedback to you would be that the major reason behind this was that there was a significant divergence between the market expectations and the ministries, the debt offices expectations regarding the future trajectory of inflation and interest rates, and what was a reasonable level of spreads that the government should be willing to pay. And we felt we decided to violate our permissible limits repeatedly because we felt that these were exceptional circumstances, and soon eventually the expectations on both sides would converge. But I'm sure this is something that needs to be debated more and often. So I hope to have a few questions on this during the session. Next slide, please. No, the next one. Sukuk. No, the previous one, the Sukuks. I think Sukuk auctions have remained pretty much in line, although in second quarter we did breach our limit. We should have remained within 25% of the quarterly benchmark. We exceeded that, but on an individual auction basis, we remained compliant throughout the first half. So I would say that the Sukuk auctions have been pretty smooth and very much in line with the targets. Next slide, please. So now let's take a look at the government securities portfolio, which is held by the market. We will like to just show you our overall long-term targets and then show you what we have achieved in terms of reprofiling our domestic debt from shorter term to relatively longer term. Next slide, please. So these are the 4 key indicators and the targets that we have set for ourselves in the medium-term strategy. Average time to maturity of domestic debt, of course, is a very important measure for us. We have set a minimum of 3.5 years, but ideally we would like to achieve our target of 4 years of average maturity by the end of financial year 23. So we still have 2.5 years to go. We think it's a very challenging target. Right now, I think the average maturity, although it has increased substantially, but it is still much below the target. I think it's around 2.6 years. You will probably see in the next slide. The proportion of public debt maturing in 1 year, this has become a very important measure lately, thanks to the IMF also, because they consider it to be a very, very important indicator of debt sustainability. So now we are committed to lengthening the maturities of public debt, and to achieve an overall situation in which not more than 1/4 or 25% of public debt matures in a single year. So it's not an easy target to achieve, but we are committed anyways. And I would like to claim that over the last 1.5 years, we have made a reasonable progress towards this target also. The third one is the share of Sharia compliant securities. We have set a target of 10% of total domestic should be Sharia compliant by the end of financial year 23. The market response is great. We can see that there is huge demand for Sharia compliant debt. I think the lapse is on our part. We have not been able to identify enough assets and structure the sukuk on a regular basis, but now we are committed to do that. Um, in the most recent auction calendar, you don't see any targets for sukuk for the next 3 months, including February. Um, we would like to tell you that we are doing everything that is possible to bring a fresh sukuk issue in the market within the current month. Um, I think 2 sections of the motorway, we are being told, have become available to structure a sukuk very quickly. So we are very confident that we will be able to issue a revised auction calendar, hopefully within the next few working days, and you will see uh, the targets for sukuk for February, March, and April. So we are fully committed to continuing uh, with the kind of issuance that you have seen so far uh, uh, on a monthly basis during the last 6 or 7 months. And finally, um, I think we all agree that from the government's perspective, a higher proportion of fixed rate debt is better because that gives more certainty to the government in terms of its repayment obligations. But considering that we have a bank dominated market with a natural and a strong preference for floaters, the proportion of fixed rate debt has traditionally been low in the government's debt portfolio. But nevertheless, we remain committed to meet at least 30% of our annual domestic borrowing needs through fixed rate debt. The good thing is that we have been able to introduce fixed rate sukuks also, and we have seen some interest in the market in the fixed rate sukuks. So that is a very encouraging development. And you must also have noticed a very steady issuance of the 15 and 20-year fixed rate bonds. We feel that has also been a very healthy development in the market. Um, we have been able to issue these bonds at very competitive and reasonable rates in recent months. And probably you have noticed that the 30-year fixed rate bond has also been reintroduced. So you must have noticed that there is a small monthly target that has now been set for the 30-year bond also. Next slide, please. This we feel is somewhat of an achievement for the ministry and for the debt office. But thanks to all of you for supporting the government in making this happen. As you can see, on 30th of June 2019, 61% of the government securities held by the market were in the form of T-bills and only 39% in terms of longer term bonds and sukuks. But this ratio has pretty much reversed within a space of 1.5 years. Now these numbers may not be 100% accurate, so do give us some margin for error because we put these numbers together in a haste, in a little bit of a haste today. But I think these are largely accurate. So you can see that now the T-bill stock is around 42% and the long-term bonds and sukuks held by the market constitute around 58% of the total government securities held by the market. And the average time to maturity measured in years has also increased significantly from 1.5 years to 2.6 years within this 1.5 year period. So thanks to the market, we think that this is a very positive development, and it has contributed a lot to improving the sustainability indicators of our overall portfolio. Next slide, please. So these are the priorities, of course, during the second half of the current financial year. Our objectives continue to be further lengthening of the average time to maturity and increasing the proportion of Sharia compliant debt. These are the two major objectives that we are pursuing. And the strategy, of course, continues to remain the same. We want to raise as much domestic debt through longer term instruments as possible. Ideally, we would not like to uh, raise any additional loans through T-bills, unless the market has a strong preference for T-bills. Uh, but our preference continues to be longer term instruments. Um, I think our track record in terms of adherence to auction targets is not that bad, although with the exception of the fixed rate bond auctions during the first half of this year. But we are committed to adhere to our targets with greater discipline in future. Uh, and the next is, of course, a preference for fixed rate securities, but it comes, of course, with the condition that the rates or the spreads should be reasonable and should be acceptable to the government from a longer term perspective. So that consideration remains paramount, but whenever we feel that the rates being demanded by the market are reasonable and in line with our long-term expectations, we have a clear preference to issue fixed rate securities in larger quantities. And finally, Sharia compliant securities. Although we are struggling to find uh, more and more assets to structure these securities. But nevertheless, the government is fully committed now. As you have just seen, we have a clear medium-term target to issue a large quantity of Sharia compliant securities. So we are very confident that we will be able to find unencumbered assets for structuring of such securities. And we are also seriously thinking about asset-light structure regime for Sharia compliant securities so that the reliance on real assets is reduced. I think this is pretty much the end of the presentation, if I'm not mistaken. So thank you very much for your patience and for your time, and over to Mr. Akbar for the question and answer session.
Thank you very much, Warraich sir, for a very detailed presentation and clarifying a lot of fusion that market was having on the outlook and changing in the floating rate PIB options ahead. Uh, the audience have participated not in terms of the questions, so they are putting up on the chat box and then sending us through messages also. So in the interest of time, since they are more or less sort of repeated questions, so I've put together a few questions on each topic. So I'll try to do justice with the questions. So right, so the first question is obviously with regards to the the floating bond that you highlighted in the presentation and the swap option that you talked about. So the question that is now from the market is post the necessary approvals, what would be the modus operandi of that floater swap? That's going to be a one-off auction, or what exactly how it would be worked out when you get the necessary approval to convert from a 3-year paper from semi-annual to the quarterly one.
I would say that our preference is not to do this through auctions. We would ideally like to give an option to the bondholders to simply exchange one instrument for the other, uh, which is supposed to be more liquid because future issuances will continue in that instrument at the same yield at which we issued the instrument that they already have. But I would admit that our current processes, our existing rules and processes probably require us to conduct auctions for such operations. So probably some changes might be needed on that front, but this is an area where we would very much like to have your feedback as to what is the best way. Because if we go for auctions, we may not like the prices at which you want to sell the bonds to us, and you may not like the prices at which we might be willing to buy back. We would like to make gains, and the market would like to do the same. So that may lead to a stalemate. In our opinion, a much cleaner arrangement would be not to put either side at a disadvantage and simply exchange the instruments at the same yield, so that neither side is worse off. But as I said, we would like to have more discussions with the Financial Markets Association and with the CFA Society on this issue. So I think there are no quick answers to this question.
Thank you. The other question is sort of related to obviously the other main product, which is the Sukuk, and there are multiple things attached to it. One, obviously, as the media, newsletters have suggested that the payments to the IPPs also have a part of the floaters as well, along with Sukuks, floater, and the cash payment. So the question that's emerging from the market is, the current delay in terms of the Sukuk auction calendar and the timelines, is it related to the issue with regard to the asset identification, since the existing one, obviously there's very less room available there, or it is a similar thing with regard to the IPP issuance with regards to the 10-year floater you talked about, that the current delay is because of the fact that you are going to issue those instruments to the IPPs. So if you kindly cover that
The
aspect.
first reason is the correct one. I think we don't think there is an oversupply of sukuk in the market. We feel that the IPPs should be able to sell these sukuk at the prevailing prices. So the first reason is correct. Right now, we did not have a ready asset readily available to continue offering the sukuk. But as I said, we're being told that the two sections of the motorway will become available uh, within the next few days. So we are doing our best to start issuing the sukuk from the current month. So hopefully you will see a revised auction calendar. So the intention was not to stop issuing the sukuk, unlike the 10-year floater. It was a practical constraint that we did not have a readily available asset, but hopefully that constraint will be overcome very soon.
Thanks for clarifying, sir. Just a follow-up, question on that front with regards to that, the issuance of papers for the IPPs. The question emerging from the market also with regards to, whether the government has thought about putting a caveat, because with your discussion also that it's a main highlight that you expect that the sell-off in floater bonds and also in Sukuk will come and hit the market. So IPPs will be realizing, the proceeds by selling in the market. So is there any thought of, putting a caveat there that for some, for some time they cannot come to the market and sell off the instrument, or there's no caveat or discussion with regards to that, A? And B, if you clarify, if possible for you, that what are the timelines of these issuance with regards to the IPPs in terms of the Sukuk and also the floater bond?
Yes, actually, the debt office did suggest that some restriction must be imposed on the IPPs not to offload these instruments very quickly in the market, but that proposal was not accepted. Although we still advised the IPPs to try and hold on to these instruments and to sell them only gradually, and to try and sell some of these to their own pension and provident and gratuity funds if possible, uh, and also negotiate with their suppliers to accept some of these bonds in settlement of their dues. Um and also negotiate with the banks whose loans they need to repay to accept some of these instruments at face value as a settlement of those loans. So we have been advising them to be careful uh, and not to go for a not to dump these instruments in the market. Don't go for a fire sale. Try to hold on or negotiate better terms if you want to sell. But this condition was eventually not imposed, although the debt office did propose it. And what was your second question? The
The
timing.
timelines of these things, yeah.
I think the first installment, sh- I think probably the agreements have been signed, and I think you will see the Sukuk as well as the PIBs issued to them any day, probably, I think early next week. The
Okay.
settlement should take place. And the next tranche, I think, is scheduled in August. Probably you are all aware.
Yeah.
that 40% of their dues are being settled now in February and the remaining 60% in August. So, but the immediate transaction, I think, will materialize within the next few days.
Oh, thank you, Raj, for the clarity. The other burning question that's from the market, just combined with the other thought that's emerging, that when you look at the overall fiscal outlook and the gross financing need, and obviously been rising, and looking at that, and plus the floater angle, there's been increase in the T-bill targets going ahead as well. So if you can shed some light on the strategy, something you covered also in the presentation, but essentially that the external part, which is related to the Eurobond issuance. Now, market is looking at that part very carefully, because looking at the international existing bond yields been showing a very good picture. So the question is, okay, what is the plan for the Eurobond issuance? Because it can also not just bring in extra dollars, but also will make your life much easier in terms of managing your gross financing requirements. So if you kindly can shed some light on that.
I would request Umar to answer this in detail because he has been intensively engaged with the transaction advisors, and he has been telling me that the advisors are very bullish and they are talking about a much larger issuance. And you're right, if we are able to achieve that, that will relieve some of the domestic borrowing pressure. So I will let Umar answer this question.
So thank you so much, sir. Right now, we're in the process of working towards issues of Eurobond, and the only difference this time is that government of Pakistan is setting up a medium-term note program. In past, we did some standalone transaction whereby we just tap the market and just mobilize amount, and every next time we have to repeat the process. The advantage of M10 program is that we will register ourselves for a period of 12 months and we can tap the market anytime once the program is registered. And we had a very extensive meeting with the joint financial advisor, and they were basically telling us that the market conditions are very conducive these days, and we can tap much more than what we have actually anticipated in the budget. In the budget, we anticipated some amount of around $1.5 billion, but I think if the market condition remains conducive as it is in the present days, so we are expecting a much higher issuance. But and we are working. Uh, you can say that we are chasing a very ambitious timeline for the issuance of Eurobond, and hopefully, you will see some good news with respect to the Eurobond issuance. It is not linked with the any IMF program or any IMF condition. The country can issue Eurobond anytime, and we are working on that. So recently, I just want to share a example of the country issuance of Egypt. Egypt has recently issued around, I believe, $4 billion and at a very competitive rate. They even issued a 40-year bond. And our advisors are suggesting us that traditionally we issue bond in a tenor of 5 and 10 years, but now they are suggesting us that we can also extend the maturities beyond this 5 or 10 year tenor. So we are very much positive on that, and hopefully the market will hear a very good news in the coming days.
Sir, but just a follow up जो market का है कोई, can you suggest some sort of timeline where we can expect some material news coming on that front? Any idea you can
Actually, our financial advisor suggested us not to divulge more information on that. They said that
Okay.
please keep it to yourself for a period for some time. It may be harmful if you divulge more information to the market right now, but I'm expecting that you will get a good news in a very short span of time.
Okay, okay, that's it. Thank you. Okay, so next section again on the recent auction, and a lot of our esteemed audience have actually asked this question repeatedly. That they have been in terms of your auction target adherence, and from that perspective that you also covered in your presentation. But in some recent auctions, we've seen like a sort of change in trend that way, that only for picking up smaller amount, relatively speaking, the cutoffs have been moved significantly, both on the treasury bill side and also on on the bond side. Market obviously thinks that gives generally a confusing signal as to what to expect going forward. So if you can kindly shed some light on this point.
I would say that the bids that you make, the market participants, are your way to negotiate. Uh, and our decisions are our response or our negotiation tool. Um, so at times we reject the bids because we feel that the market conditions do not justify a higher borrowing cost, and we feel that the market will very soon realize uh, that the lending rates should be somewhat lower. I think in terms of the fixed rate bond auctions, there was a significant divergence between our expectations and the market's expectations almost throughout the first half of the year. We felt that the inflation figures would uh, come down very sooner than later, but the market seemed to think otherwise. And we would like to admit that the market turned out to be correct, and inflation did persist for longer than our expectations. So the increase in the yields of fixed rate instruments is partly an admission on our part that the market was right, uh, and probably the yields should be somewhat higher. As far as the recent increase in T-bill cutoffs is concerned, I think you must have sensed already that this is a strategy or a way to incentivize the market to move out of the 3-month T-bill and start investing in the 6-month and the 12-month tenors. Uh, so there is a realization that probably paying a somewhat higher premium in the 6 and 12-month tenors is not a very big price to pay, considering that these are still short-term instruments. And hopefully, as inflation rates stabilize, the market expectations will again change, and we will be able to um, the yields in these tenors will come down. But I think for now, the strategy, of course, is to give an incentive to the market not to concentrate itself in the 3-month tenor. So I think I would stop at that. I think I largely answered your question.
Thank you. Okay, just in the interest of time, the last, a couple of questions. One is the follow-up on the Sukuk point that you mentioned, that you were waiting for the availability of the asset. So the market question is with regards to, the shorter term Sukuk. Is there any consideration for issuing once you get that asset available in some considerable number? So are you considering issuance of, shorter tenor Sukuks as well going ahead?
I would say let's get your formal feedback on this, because this is an important point that you have raised. We would very much like to issue the shorter tenor instrument, but our experience with T-bills is very bad. Once the market becomes fond of and becomes addicted to the shorter term instruments, it becomes very difficult to lure the market into the longer term ones. There was a considerable interest in the 10-year floater, but since we started issuing the 3 and 5-year tenors, the interest in the 10-year floater has waned. So the Islamic market is one market where there is no short-term instrument. So we are able to borrow in longer tenors in very decent quantities. Although we do realize that there is a genuine need for at least some issuance in the shorter tenors, but our fear is that if we encourage the shorter tenors, then the market will again change its preferences. But anyways, I think securities in all the tenors should be issued and should be available, because meeting the market's liquidity and maturity needs is an equally important objective for the government. So let's seek feedback formally from the Financial Markets Association and from your society as well. And let's devise a strategy jointly in this regard.
That'll be great. So we'll, on behalf of the civil society, will take the lead on that, and then we'll conduct, a sort of formal survey or feedback we'll take from the market and try and share with you in coming days, just to give that perspective from the market participant and CFA society. Okay, thank you very much, Price Up. On this note, would like to thank you for taking out time and on a very short notice and able to answer market concern on the changing dynamics of various instruments available. Really appreciate your kind support throughout for society's event, and also we're grateful to all the participants for joining in. On a lighter note, we have seen another century today by the audience, and we've actually crossed more than 100 participants in this webinar. So really thankful to all the participants on behalf of the CFA Society. And last but not the least, I just need permission to, because there are a lot of questions in regards to a very comprehensive presentation that you made. If you can share the copy of the presentation with the participants, with your permission, will be.
Yeah, please do. Please do. Please do. And if you feel there are any questions left unanswered, please do share with us on email, and we would be happy to send our responses to those questions. And thank you so much to CFA Society for making it possible. We are very grateful.
Thank you very much. Okay. Allah Hafiz. Thank you.